Ladies and gentlemen, good day and welcome to the Gujarat Fluorochemicals 3Q FY22 Earnings Conference Call, hosted by Batliwala & Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ranjit Sirumala from B&K Securities India Private Limited. Thank you and over to you, sir.
Thank you, Malika. Good evening, everyone. B&K Securities is pleased to hold the conference call of Gujarat Fluorochemicals Limited to discuss its 3Q FY22 financial performance. From the management, we have with us today Mr. Vivek Jain, Managing Director, Mr. VK Soni, Head Products and New Initiatives, Mr. Manoj Agrawal, Chief Financial Officer, and Mr. Vibhu Agrawal, Head Investor Relations. I would now like to hand over the floor to Mr. Manoj Agrawal, Chief Financial Officer, to start the call proceedings. Thank you and over to you, sir.
Thank you, Ranjit. Thank you very much. On behalf of Gujarat Fluorochemicals Limited, I would like to extend a very warm welcome to all the participants. We are happy to inform that Board of Directors of Gujarat Fluorochemicals Limited has its board meeting approved the financial results of the company for Q3 FY22. Financial results along with the investor presentation are uploaded on the website of the stock exchanges as well as the website of the company. I will take you through the presentation initially, then we can open the call for any question that you all might have. So, starting with the highlight of the quarter, consolidated revenue for the quarter we are at 1,007 crores, up by 59% on year-on-year basis. Consolidated EBITDA for the quarter was at 319 crores, up by 125% on year-on-year basis. The EBITDA margin for the quarter were at 32% as compared to 22% for Q3 FY21. Consolidated PAT for the quarter was at 201 crores, up by 95% on year-on-year basis. Similarly, PAT margins handsomely increased from 16% in Q3 FY21 to 20% currently. So, growth in the quarter was mainly led by the increase in the PTFE and the caustic prices. New fluoropolymers witnessed a growth of 41% on year-on-year basis. However, on sequential basis, segment witnessed a dip of 17%. This was primarily due to unavailability of a key raw material named R142B, which was the feedstock for PVDF and FKM. Sales in this segment were further dented on account of the fire incident at our Ranjit Nagar plant, which delayed the commissioning of our in-house ability to manufacture R142B. As of now, we have now commercialized, our R142 plant has been commercialized and started operating. As regard to new projects and additional capacity announced earlier, entailing a capex of 2,500 crore over 22-24 are on track as envisaged. So this was the key highlights of the quarter. Now I will give you the detailed overview of the financial performance during the quarter. Consolidated revenue for the quarter Q3 FY22 stood at rupees 1,007 crores, which is 59% higher than the revenues for Q3 FY21, which were at 634 crores. Further, on quarter-to-quarter sequential basis, as compared to Q2 FY20 revenue was at 964 crores. There is a growth of about 4%. EBITDA for Q3 FY22 stood at 319 crores as compared to 142 crores in Q3 FY21, up by 125%. When compared with the EBITDA for the preceding quarter, that is Q2 FY22, EBITDA was 296 crores. Current quarter EBITDA is higher by 8%. As far as PAT concerned, PAT for Q3 FY22 is at 199 crores This is excluding a profit on sale of investment property 2 crores, up 95% from Q3 FY21, which was 102 crores. Further, PAT for the previous quarter Q2 FY22 was 186 crore, excluding profit on sale of investment property of rupees 19 crore, and is up by 7% on sequential basis. So this is the brief financial overview of the company at the aggregate level. Now, if you look at the performance of the various business verticals, the caustic soda business revenue for Q3 FY22 stood at 178 crores as compared to 70 crores in Q3 FY21, up 154%. Caustic soda revenues when compared to previous quarter Q2 FY22 is up 75% from 102 crores on sequential basis. Caustic soda plants are currently running at full capacity. Caustic soda prices are also started descending during the quarter and now seems to have stabilized. Demand supply situation expected to remain balanced for the next several quarters. There has been severe increase in the cost because of elevated energy prices. How this cost has been more offset by the higher realizations in the caustic prices. Within the chemical verticals, next product line is chloromethane. So chloromethane revenue for Q3 FY22 stood at 146 crores as compared to 75 crores in Q3 FY21, up 95%. Chloromethane revenues when compared to previous quarter, that is Q2 FY22, is up 20% from 122 crores on sequential basis. Our chloromethane plants are also running at full capacities. Prices of MDC has started to coming down from the peak levels achieved in the months of October, November 21. And we expect that prices are likely to be impacted in Q1 FY23 as additional capacities will be commissioned in the domestic market. Refrigerant revenues for Q3 FY22 stood at 69 crores, which were same levels as in Q3 FY21, almost flat. Refrigerant revenue when compared to previous quarter Q2 FY22 is down by 25% from 92 crore on sequential basis due to seasonal factor. We expect that the demand for refrigerant is expected to start descending in the current quarter as soon as the summer season kicks in. The next business vertical is our polymer business. So PTFE sales for Q3 FY22 were at 386 crores as compared to 215 crores in Q3 FY21, up 80%, gaining significantly on account of rise in both prices and volume due to robust demand across all geographies. PTFE sales when compared to previous quarter Q2 FY22 is 7% from 360 crores on sequential basis. Our PTFE plants are also now running at full capacities. Demands are robust across all geographies. Prices have moved up and remained firm. And demand is also expected to remain robust for next few quarters. We will be doing capacity augmentation and debottlenecking, etc. with the demand growth. The next business vertical is new fluoropolymers. New fluoropolymer sales were at 156 crore, up 41% as compared to 111 crores in the same quarter previous year, that is Q3 FY21. However, on the sequential basis, it is marginally down due to raw material constraint as explained earlier. So currently we are having a capacity utilization of around 55%, majorly because of raw material constraint, which we had earlier. Now with the R142B plant coming up, and we should able to do away with this limitation of availability of 142B. Specialty chemical vertical. Specialty chemical down by 44% from 87 crore to 49 crore when compared to same quarter of previous year. That is Q3 FY21. As you all are aware that the production and sales during the Q3 FY22 majorly got impacted due to fire incidents which happened in the last fortnight of December at our Ranjit Nagar plant. However, the plant is limping back to normalcy based on the various approvals which we are getting to restart the plant. So thus company has posted a robust growth in most of the business verticals, surpassing the revenue and profit achieved in FY21 in the 9 months of the operation of the current year. Revenue for the 9 month ending 31st/12/2021 is at 2,883 crores, which is 9% higher than the full year revenue of FY21, which was at 2,651 crores. Similarly, PAT for 9 month ending 31/12/2001 is at 870 crores, which is 36% higher than the full year PAT for FY21, which was 638 crores. With a significant increase in profitability and the return ratios are also improved significantly. ROC is improved from 11.92% to 24.06%, and ROE is improved from 9.91% to 19.77% as compared to FY21. ROC is expected to improve further given the higher margin from incremental sale of existing as well as new products. On the debt front, company is now virtually debt free with the net debt equity ratio is reduced further to 0.28 from 0.33 in FY21. We intend to reduce it further so as to become a zero debt company in near future. As regards to new initiative which was explained in detail in the presentation and during the last con call, now during the quarter company has incorporated following wholly owned subsidiaries, namely GFCL EV Products Limited for providing solutions for entire value chain of all type of batteries, battery components and products of electric vehicles, etc. GFCL Solar and Green Hydrogen Product Limited for providing solutions for entire value chain of all types of products and components for solar and green hydrogen products, etc. And one more subsidiary named Gujarat Fluorochemicals FZE UAE for trading and manufacturing of chemicals. GFL expect that all these initiatives to offer a sustained business growth over a foreseeable future with higher margins and which will lead to further improvement in our financial return ratios. So that, ladies and gentlemen, is a walkthrough to the presentation. I would like to open this up for any question that you might have that we'll try to answer. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question at this time, please press star 1 on your phone. We have the first question from the line of Ketan Gandhi from Gandhi Securities. Please go ahead.
Hi, sir. Congratulations, really good set of numbers. My question is, sir, there is a significant improvement in the demand of the PTFE and the price worldwide. So, I think are we looking at increasing the price of the PTFE?
Well, Ketan, we have already increased the prices from 1st of January, substantial price increase from 1st of January this year.
So can you quantify if you don't mind?
Between 20 to 25%.
Oh, wow, that's great. Thank you, sir. I had only one question. If I have something, I'll join back in the queue. Thank you.
And the demand continues to be very robust for all our PTFE.
Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Good afternoon, everybody, and thanks for taking my question. Vivek, first question on the PTFE. The price increase of 25% looked like a
very steep. Where are we seeing the demand coming from for the PTFE? Which is the segment which is driving the growth? Because auto, which used to be the largest segment for us earlier, that segment at least is underperforming globally. So what is driving such a strong PTFE, and what is that we are able to push a 25% kind of a price increase without seeing an impact on demand?
Sanjay, to some extent, the prices had been suppressed given the sharp raw material price increases which had taken place in the previous quarters. That was one of the starting points to go in for this price increase. Second, there is for most of the products which you make across all geographies, whether it is Europe, US, South Asia or India, there has been a very robust demand, and it's coming in from all application areas. I don't think I can say it is limited to only automobiles. It's coming in from all areas, and automobiles also has been up, despite the fact that there has been some headwinds as far as auto sector is concerned because of the chip shortage. But despite that, there has been a robust increase in requirements from the auto sector also. And we expect that as the chip shortage eases, the demand from the auto sector will further increase.
And can you give which other sectors are important for us from the PTFE perspective?
Sorry?
Which is the other sectors which contributes materially to our PTFE apart from auto?
It is the chemical industry, the mechanical industry, the electronics industry, semiconductor industry also has done very well. So I think I don't think I can say that it is from one particular sector. We are seeing this demand growth from across sectors, across applications, and across geographies, frankly speaking.
Oh, got it. Is there any shortage from the China side? Is the China being seen any major shutdown of PTFE, or in general the demand has been stronger and supply has been stable?
China, as I mentioned earlier, is substantial. About 80% of the production in China is for the domestic market. It's very limited with the export. Okay. And there has been an increase in the Chinese demand also, and which we are operating in US and Europe. Chinese have not been able to penetrate the high-end application areas. So we see limited competition in China in a substantial percentage of our markets abroad.
Got it, sir. Got it. That's fair. Second, on the 142B, what is the kind of capacity we are putting in 142B? And I understand that you also mentioned last time that we would start from VCM to 142B to the VDF. So how much is this 142B, and when will we see the full backward integration in the 142B?
So as we just mentioned, 142B plant was supposed to have been commissioned by middle of December, but because of the fire there in Rajneetnagar, it got delayed. So it's got commissioned now around the 10th of January. So now we are able to. So the capacity eventually will be about 70 to 75 tons per day. We will of course not be able to utilize the entire capacity now, but over a period of time, as our 142B, as our PVDF capacity keeps on going up, we will keep on increasing the usage of 142B. And we are also looking at the prospects of exporting 142B because, as you may know, there is a huge shortage of 142B worldwide. Prices, of course, have gone up, and we are now exploring opportunities over and above meeting our own requirements of meeting our own increasing requirements of 142B for captive use.
Got it. And say by end of next quarter, we should be hitting the full capacity utilization of 70-75 metric ton per day?
This is something which you have to watch and see by when we will be able to utilize full capacity. But it is important to know that we have the when we backward integrate into the VDC facility by the end of the year, we will have substantial capacity of 142B available to meet all our requirements going forward of PVDF as we keep on expanding the PVDF business for the lithium-ion EV batteries.
Got it. Now that brings me to the next question of PVDF. We have started submitting the samples of PVDF to the battery cells manufacturer. Any luck there? Have we seen any approvals for our PVDF, and when should we be supplying the PVDF on the battery side?
So as I mentioned, that we have sent out the grades which we have currently made to some laboratories in Europe and US, as well as some users in South Asia. So the latest feedback, of course, with all the year-end closures, etc. So we've just been able to receive some feedback from a US customer who has substantially okayed the product which we have made. It's going to undergo further testing of 3 months. Thereafter, they will be able to qualify it for their requirements. On the other side, South Asia, again, we have sent the grades which we have developed to 3-4 customers, but we have yet to receive the feedback. We are expecting that maybe by the middle of February, we'll start receiving feedback from at least 1 or 2 of the current customers.
Got it. And from the PTFE perspective, and now, so first of all, have we completely restarted the Ranjitnagar plant, or it is partially operational as we speak today?
So as I mentioned, the 142B facility is now fully operational. The other plants, we are starting commissioning them one by one, and we are expecting that at least a majority of the plants we would have commissioned by the end of the first week of February.
Got it. That means, are we seeing any PTFE expansion acceleration now, given that the PTFE demand is so robust, and we already have a plant of putting PTFE, and we already have a TFE3? Any plans to expedite that expansion, or it's on track?
We are toying with the idea that, but otherwise, what we had indicated is probably is likely to be the second, about the second half of the calendar year, beginning of the second half of calendar year 23. But we are looking at some possibility where we can pull it back by 1 or 2 months. But I suppose it will take that much of time. Maybe.
Fair enough, sir. Thanks for answering all the question, and best of luck for your future quarters.
Thank you. Thank you so much.
Thank you. We have the next question from the line of Rohit Nagraj from Emkay Global. Please go ahead.
Yeah, thanks for the opportunity, and congrats on a very good set of numbers. And hearing the commentary is also quite encouraging. So the first question is, new fluoropolymers, we will be having 100% utilization by Q1. PTFE is currently 100%. So if you could just give us a timeline of when the new capacities for both these will come, because that will be essential from the volume growth perspective. Thank you.
So as I mentioned previously, we will be able to get to almost 100% capacity utilization by the first quarter of 22-23. We are pulling in an additional capacity of 300 to 400 tons of new fluoropolymers, which will also get commissioned by July of this year, and we hope that by 31st March 23, we will be operating this additional capacity also at full capacity.
Right, sir. Got it. Thanks. So the second question is on the fluoro specialty. So this particular business has been slightly struggling over the last couple of quarters. And as last indicated, we have a capex of about 550-600 crores by March, with a revenue potential of close to about 800-900 crores. So given the current situation on this particular segment, do you foresee that there will be challenges in the near term and probably the revenue potential of 800-900 crores by FY23 will get slipped by a couple of quarters? Thank you.
Well, if you look at the entire 22-23, maybe there might be some dip in the turnover. We had expected about 800 crores. It might, go down to about 700 crores. But it will also depend upon how fast we are able to get these new capacities which are being set up. And as I mentioned earlier, there are 3 new plants which are slated for commissioning by end of March this year. How quickly we ramp up sales and production from those new facilities. So I would say that the good number would be about 700 crores top line in 22-23, given the current situation.
Got it, sir. And just one last clarification about the accident that has happened. So was there any impact on the revenues during Q3? And since the plants will be now starting operation in phased manner, would there be any revenue impact which is foreseen in Q4 as well? Thank you.
Well, the brunt, there was, perhaps loss in profitability of about 25 odd crores in December. And perhaps it might have another impact of about 15 odd crores during January. But I think it'll be limited to that. And we have already mentioned that we have a loss of profit policy, and we have already filed claims with the insurance company for that compensation.
Got it, sir. Thanks for answering all the questions and best of luck.
Thank you.
Thank you. A reminder to the participants, if you have any question at this time, you may press star and 1 on your phone. We have the next question from the line of Hansal Thakkar from Lalkar Securities. Please go ahead.
Hi, thank you for taking my question and congratulations to the team on another fantastic quarter. So my first question is, I just wanted to know if there was any update as far as securing our lithium bicarbonate supply under the Kabul scheme?
So we are, of course, we are in touch both directly as well with the government of as well as through the government of India, NITI Aayog, with tying up sources of lithium carbonate or lithium hydroxide from 2-3 geographies. One is Australia and some of the South American countries. So we are progressing well, and we are sure that we will be able to tie up the lithium requirements for our upcoming projects. It will take maybe a couple of months, but since our first plant is going to be commissioned by December 22, we have sufficient time to be able to tie up the contracting for lithium. But we made substantial progress as we speak on discussions with the potential suppliers.
Excellent. So this will be a one-on-one, right? As in, whatever agreement happens will be one-on-one with the supplier, or it will basically go through the government?
No. It'll be one-on-one.
Okay, fabulous. And so my second question is, so congratulations. I've just noticed that, SEAC has basically forwarded our expansion plans to the SEIA. Any update on when that meeting is likely to be or when we are likely to receive that clearance?
It's always difficult to predict a date as far as government clearances are concerned, but we expect to receive it fairly shortly.
Oh, wonderful.
Maybe in the next 1 to 2 months, we should be able to get our clearances.
Great, excellent. Good to know. And given that we are in such a healthy state, any thoughts on when we can become a dividend-paying company, sir?
certainly from this financial year. Before that.
Wow. Excellent, excellent. Congratulations, sir. That's all from my end. If I have more questions, I'll come back on the queue.
Very much.
Thank you. We have the next question from the line of Rohan Gupta from Edelweiss. Please go ahead.
Yes, sir. Good evening. And sir, congratulations on solid set of numbers. Sir, 2 to 3 questions from my side. Sir, first on PTFE, you mentioned that you have taken in January almost 20 to 25% kind of price increase. Just wanted to know, is it primarily driven by the cost push, which we are seeing that the increase in input cost is driving the prices across, or it's just coming from the demand pool and solid demand supply scenario globally?
See, a bit of both, but also, of course, largely because of the demand pull which is coming from sectors across geographies, from all sectors across geographies. And see, at this point of time, we have also achieved a position of we are a critical part of supply chain for a lot of customers, and our grades have been fully qualified now with various end customers. Their demand is also growing, and it is very difficult to get suppliers who will be able to give products which are required for those exacting requirements. It's been mentioning earlier, it takes a lot of time to develop products, as well as the testing and qualification cycle also, which has to be undergone. So I think at this point of time, we are in a very strong position to meet the current demand, and so that has also allowed us to have some additional price increase.
And sir, with the solid demand supply scenario and rising price trend, and our PTFE plant is already at fully utilized, so you do have a capacity expansion plan in PTFE by 25%. Is there any thought process in reviewing that capacity addition which you are planning by end of next year?
I think at this point of time, we are staying put with those numbers. We will see how the entire situation materializes. We always have the possibility of further adding capacity, because we will have the monomer additional capacity in our monomer plant. So on a modular basis, we can further increase capacities, but that of course will totally be dependent upon how we see the markets growing.
Okay. Sir, on our fluoropolymers, so I understand that this quarter has been impacted by the raw material availability, but you have mentioned in your presentation that you expect almost 100% capacity utilization to reach by Q1 of next year, from 55% utilization in the current quarter. That's almost close to just doubling the volume by Q1. So we have not seen any, any customers have not who have not bought from us and have resumed to supply or sourcing the product from somewhere else. In this kind of scenario, when the raw material availability is impacted, I'm sure that customers definitely will be demanding the product and will be needing the product, and with our inability to meet those demands, probably they would have resumed to some other supplier. So how quickly we repair it and how quickly they come back to us, just wanted to understand that how the dynamics work here.
Well, see, there is an overall shortage of availability of the different fluoropolymers. So while to some extent, say in the December quarter, we were impacted in the manufacture of PVDF and FKM because of non-availability of 142B. That shortage prevailed. It's not that customers were able to get the material from elsewhere, from other suppliers. So there is a lot of pent-up demand, and as we speak now, since we have started resumption, we have resumed production of FKM and PVDF. The next couple of quarters are going to be very strong as far as demand is concerned. So So getting back to the customers is of no issue at all. The customers are already lined up there, and they are waiting for us to enhance our production to meet their requirements. And that is what we are pushing for just now, is to get those additional capacities up as quickly as possible, so that we can cater to the requirement there in the market. So there has been a demand push. There has been a fairly robust increase in demand, and at this point of time, since we are an integrated player, we have a 142B available with us, and the customers are looking at us preferentially, as we have control of the critical raw material. As I mentioned, the critical raw material 142B is in tremendous short supply, and for that reason too, the production of the FKM in 142 and PVDF has not been able to keep pace with the rising demand.
So, sir, when we say that the unavailability of current quarter, so even at the higher prices, it means the raw material was not available, and I assume that it was not available to anybody else also.
Yes, for instance, we had already contracted to import 142B from China for the months of October, November, and then they refused to supply. So, for November, we didn't have any raw material available, and our own plant, which has been commissioned now, was supposed to be commissioned by middle of December, but because of the fire there was this delay. So we were caught in a situation where we didn't have the raw material, even though there was a huge demand for the end products. But now that we have our own 142B, we are in a very, very strong position to be able to cater to this demand for these polymers.
Okay, and sir, at 70,000 tons per day capacities of 142B, which we had commissioned, at 100% sir of fluoropolymer, what will be the captive consumption of this 142B?
No, so it's not 70,000 tons. It's 75 tons
70 tons per day.
That is our capacity. But I don't foresee us being able to utilize the full capacities till the next 2-3 years, till such time that the PVDF demand from EV battery application starts picking up substantially. But at this point of time, we will possibly be able to utilize about between our own captive requirements and exports, we would probably be able to run the plant at about 50% capacity.
That is roughly 35 tons per day.
50 to 60% capacity, yes. This will keep on increasing as we keep on increasing our PVDF capacities going forward.
Sir, I just wanted to understand.
Sorry, Mr. Gupta, may I please request you to return to the queue for any follow-up?
Okay, no problem.
Thank you, sir. We have the next question from the line of Rupesh Tatia from IntelSense Capital. Please go ahead.
Hello, sir. Thank you for the opportunity and congratulations for the great set of numbers. My first question, sir, is from various analyst reports, what we understand is the fluoro specialty margins are lower than company average with new products and new capex coming up. Do you see these margins going to company average in next 1 or 2 years?
Sorry, I didn't get your question right. From which segment are you talking of?
Fluoro specialty. Fluoro specialty, sir. Fluoro specialty.
Yeah. So yes, with new investments, we are expecting it should come up to the company average, and we expect that the company average EBITDA numbers will go up, given the fact that we are both in new polymers and PTFE. We are the margins are very, very strong at this point of time. So specialty chemicals, maybe the margins will still remain lower than the fluoropolymer and new fluoropolymer segments.
Okay, but there will still be significant improvement.
There will be an improvement from where we were. There is going to be an improvement.
Okay. And sir, in PVDF films also, can you provide if products are developed, some customer sampling is happening?
No. In PVDF, we are for PVDF films, we are setting up a plant to manufacture, to convert the PVDF resin to film. This will be up by September of this year, and thereafter we will start offering the films to solar panel manufacturers, both in India as well as abroad. So this will also be one more avenue for increasing our PVDF volumes going forward, apart from the lithium-ion battery application.
Okay, and just two small follow-ups there. So this PVDF film will largely be domestic.
Domestic as well as overseas. There's large capacities of because of the climate change imperatives. Almost every country has come out with aggressive plans to increase renewable energy, and solar is going to be a mainstay there. So there is going to be a huge increase in demand of production of solar cells worldwide. So we hope that other than India, where of course there is also a big capacity increase, the production increase which is slated to come, but we expect the market to expand in Europe and US also. And we will be able to cater to that to those geographies also.
Okay, that is good to know, sir. And can this be thought of as a forward integration, and PVDF films might have better margin than just PVDF?
Yeah, well, there would be better margins for sure, because there is a conversion into a value-added product, so there will be an improvement in margins for that quantum of PVDF which is going to go into solar films.
Okay, and then sir, my final question is, can you give update on the wind power project? I think 25 megawatts was.
So we'll have about 20 megawatt put up by March 31st this year, and the balance, as I said, we are waiting for the policy to be announced by the Gujarat government on captive wind. If the policy is conducive and can permit us to put up additional capacity of wind for our captive use, we will go ahead and put up additional capacity. And to the extent that we are not, by end of June, we will know for sure the money, the advances which we have paid will be returned back to GFL.
Okay, and sir, then with this 20 megawatt, what kind of cost savings can we expect? Because sequentially, power cost inflation is actually quite high. So what kind of savings we can expect?
We would be able to get on this 20 megawatt investment will be about 120 crore. We would expect about a 40% ROCE. So maybe about 3 to 4 crore rupees in a month on the 20 megawatt.
Okay. Thank you, sir. Thank you for answering my question.
Thank you.
Thank you. The next question is from the line of Anand Jain, who's an individual. Please go ahead.
Thanks for the opportunity, sir, and congratulations on the great set of numbers. Most of the questions that I have been answered. Just one question, sir. Did the fires had any impact on her capex plan, and has the construction in that site started?
No, it hasn't had any significant impact at all. It was the fire took place in a small plant. The plant machinery in total capex in that plant was about 35 odd crores, and of course we have a machinery breakdown policy, so we expect to recover that from the insurance claim.
Second question is on the PVDF side. So right now we have 100 tons per month PVDF capacity.
Yeah.
And going ahead, we'll have 100 tons added by Q1 of FY23, and then 100 tons more for the film. I think that I'm right there, right? Is that the correct?
We'll have another 100 tons added by June, July this year, and that will cater at this point of time to the both lithium battery application as well as the film application. We are expecting, and we are watching the market, but we expect that there's going to be a shortage of supplies for EV batteries, even in China, because just now most of the battery manufacturing takes place in China. So we are expecting that there will be a demand coming in from China also, and from the year 23 onward, from the second half of 23 onwards, we will expect the increase in demand coming in from US, Europe, and India as battery plants as battery plant capacity keeps on getting added in these three geographies. So actually, the demand will really start sharply increasing from the beginning of 24 onwards. But in the year 23, we would expect that there would be demand which is going to be coming in from China, which we are, and as I mentioned, we have already sent the grades which we have made for qualifications there. Hopefully, in the next few months, we should see some qualifications taking place, and we will then look at supplying the PVDF binders to China, at least in the next 1.5 years.
Okay, that's superb, sir. Last question is on R142B, sir. At 75 tons per day, we roughly have 2,000 tons annual capacity, roughly. And if I were to look at PVDF requirement, that's like roughly 1.6 tons per ton of PVDF. Is that right? 2 tons of 142B for 1 ton of PVDF. So we will have significant spare capacity for 142B, sir. So in the next few years and for the next couple of years, and during that time we intend to export also. So we can. And 142B is also a raw material for FKM, where we are also increasing capacities now. So we expect ourselves to export significant amount of R142B going ahead. Well, it all depends upon what is going to be the gap in the market. We are exploring that, but there could be a situation where we might have surplus capacity available over and above our own requirements as well as the export requirements. But frankly speaking, it doesn't matter because that surplus capacity will get used up as we keep on adding more and more PVDF capacity, because PVDF is modular. You can keep on increasing capacities by reactor, whereas 142B and the precursor VDC are the continuous process plants, so you have to set up a certain capacity plant in any case. Okay. One last question, sir. Are we also looking to make separator coating? Because we only talk of binder, but I think separator coating will also require PVDF. Mr. Soni?
Yes, separator coatings do need PVDF, but the volumes are very small in comparison to the PVDF binders. So for the moment, we are focusing on the PVDF binders, where we have to add a substantial capacity.
And if you can give some rough estimate in terms of, gigawatt or kilowatt or whatever of PVDF required of, gigawatt, kilowatt of battery.
Yeah, sure. You see, globally, there are estimates which range from 2,500 gigawatt hour to 4,000 gigawatt hour by 2030. And very broadly, the PVDF norm varies, of course, from chemistry to chemistry of each battery, but on average about 60 ton per gigawatt hour. So if you multiply 60 ton by 2,500, so 150,000 ton of PVDF at the minimum side would be needed. Only for the battery application. Yeah.
So that is by 2030, right?
That's by 2030, right.
Oh, okay, great. Thank you, sir.
Thank you. The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Thanks again for taking my question. First on the pricing of the PVDF, FKM, and the new fluoropolymer. we have taken a 25% price hike in PTFE. Just wanted to understand how is the pricing scenario in the new fluoropolymers?
See, the FKM and PVDF prices also have substantially increased over the last 1 year. So, given the shortage, so PVDF prices would be ranging from $35 to $45, depending upon which application. FKM prices would range from about $28 to about $35, again depending upon the grade.
And what were they a year back?
FKM prices would perhaps have been about $12 to $15.
Okay, almost double the price. And in the PVDF?
PVDF would also be maybe about $12. But of course, PVDF pricing for lithium grades is much higher than prices for the normal usages of PVDF.
Okay, so you're telling lithium grade will be higher than $35 to $45?
At this point of time, currently.
Got it. And we will be able to place at least $35 to $45 once we start manufacturing it completely.
Well, that is the intention. So let's see. Once the qualification is over and the initial trials are over, and the customers start taking initial commercial quantities and then build it up. So yeah, we're keeping our fingers crossed.
Got it. Just one clarification on PTFE. This 25% price hike we have taken is on the 100% of the revenue we generated in the Q3, or will there be some annual contracts which are yet to be renewed? There are long-term contracts. There are certain grades where the similar price hike are not taken, or it's a blanket 25% price hike across the customer, across the product category?
Ideally speaking, it will be a blended price increase. Of course, as we had mentioned earlier, PTFE is sold on spot, sold on 1 month, 3 months, 6 months, 12 months, kind of different customers follow a different buying pattern. So, but at this point of time, I would say that between 20 to 25% will be a weighted price increase from the 1st of January.
And this entire effect should take in a quarter, or will it take a 2 quarter or 3 quarter?
It will start in this quarter itself.
Okay, so entirely will start coming. Got it. One on the 142B, you made an interesting comment telling that you are looking at an export opportunity. Now, given that the prices of PVDF and FKM are such high, I believe that 142B also be expensive, and that is also a great opportunity to for Encash. How much of the 142B can we export, say, in a year or 2 years, and what is the prevailing prices for 142B?
Rajesh, we are still exploring it. We have started contacting customers because there was no point in contacting customers prior to our having started producing the product and getting the right quality. We have just started doing that. So we are exploring the market. I won't be able to very accurately tell you how much we'll be able to export every month, but there will be an export opportunity, and the pricing should be quite remunerative.
Got it. One last on the LiPF6. Where are we in the entire process? I understand that we are in the process to get EC clearance, but from the product development, is it completely ready for a commercial product, and is that product being approved by certain customers, certain consultant or certain labs which we need the right purity and right moisture?
So we are setting up, as I had mentioned, we are setting up a commercial plant which will be up by the end of this year. And we will start sampling from that plant. But we are also setting up a pilot facility which will be ready by August this year. This is primarily to ensure that we are able to develop the process of using very different kind of ores, because ores can differ from origin to origin. So basically, this facility is being created to ensure that we are able to optimize the process which will be utilized in our main plant. So thereafter we will start, after the pilot plant is up, then we will start sampling to customers both in India as well as overseas.
Got it. And we will be buying the pentaphosphorus, right? Or we will be buying phosphorus and also making pentaphosphorus.
Yes, Mr. Soni?
Yes, actually we will be starting our initial plant by importing the PCl5, phosphorus pentachloride, but we'll be converting it to PF5 ourselves. And later on, we have plans to make PCl5 also ourselves, starting with yellow phosphorus.
Got it. That is when we will require the chlorine plant also to support that.
No, chlorine plant requires for all the components. We will.
Okay.
Chlorine means you mean the AHF plant?
No, not AHF plant, for the CL plant, caustic plant.
The caustic plant, yes. No, caustic plant we already have, but we will decide at the appropriate time whether to buy or make chlorine.
Fair enough, sir. Fair enough. Thanks for all the answers again, and best of luck.
Thank you. The next question is from the line of Hansal Thakkar from Lalkar Securities. Please go ahead.
So thank you again for the opportunity. Purely for academic understanding, sir, would I be right in comparing our LiPF6 salt and electrolyte business to Tinsy Minerals from China?
To Tinsy Minerals?
Yes.
Yes. In battery industry, there are different type of players. Some players who make lithium batteries themselves, but there's a player you mentioned, they make the lithium salt as well as the electrolyte. Yes, so we'll be making the salt and also integrating it up to the electrolyte formulations.
Excellent. Okay, wonderful. Thank you so much for the clarification.
Right.
Thank you. Due to constraint, this will be the last question. I now would like to promote Mr. Rohan Gupta from Edelweiss Securities. Please go ahead.
Thanks for the follow-up. Sir, just a small clarifications on various fluoropolymers. So we are in a various stage of development as far as the many battery-related products are concerned, especially LiPF and also. Just wanted to understand, sir, what kind of customer confidence you are getting, and in terms of engagement or in terms of customers' approval for these new fluoropolymers. What is the time frame you are keeping in mind that most of these products are getting the approval, especially coming from the batteries and solar panels?
So Rohan, as we mentioned that we have already developed some grades which are required for EV batteries. We have pilot plant facilities, and we are working on some additional grades which are also required for some battery applications. So the whole process of qualification, starting from as we develop these new grades, could take about 6 months to 1 year. So for the grades which we have earlier developed, as I mentioned that we've already sent it for qualification to some labs in US and Europe, as well as to some customers in South Asia. For this, for the grades which we have already developed, we expect that by end of February we would have received the initial feedback from these customers. Should the feedback suggest that we still have some gaps to cover, then we will do that in our pilot facility and cover those gaps, and then send the product back for qualification to the customers. But at this point of time, we have sufficient time before the demand really picks up for EV batteries. Except for China, of course, as I mentioned, that maybe since our initial grades itself are in the process of qualification, and hopefully in the next 1 month we should see some favorable response. We might start exporting China, to Chinese customers for their requirements. So otherwise, normally, to develop the grade and take it to and have it fully qualified could be a process which could take almost a year.
So probably by Q1 or maximum Q2, we should be seeing that some of the products grade which we have already developed will see the customer qualifications and approvals and should start contributing to revenues maximum by Q2.
Yeah, from second half of the current calendar year. Yeah.
Okay. Thanks a lot, sir. Thank you very much.
Thank you.
Thank you. I would now like to hand the conference over to Mr. Manoj Agarwal for his closing comments.
Yeah. We would like to thank you, all participants, for your interest in the company. We look forward for your continued participation on these earning update calls. Thank you very much.
Thank you very much, sir.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Batliwala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.